So years ago when I got divorced, I was a little bit wary because the accountant that we were using had not only been mine and my ex-husband's, but his family's for a generation before that. And during the divorce process, I stopped trusting a lot of people. And I felt like one of the people that I felt like I didn't feel comfortable with anymore was the accountant because our financial information was such a mess. So we're going to be talking today about how to protect what's yours, especially during a divorce. And I'm wondering what you think about this, Tony, today's guest, who will introduce himself in a second. What do you think about, is there a conflict of interest when a divorce occurs with an accountant?
Absolutely, there is. That happens very often, where an accountant is part of, has worked for a family for years and years, and sides with one spouse over the other. And if you're the spouse that you feel he's not siding with, then that's time to find another accountant.
Yeah, it was really tricky. So, Tony, how about you introduce yourself, say who you are and what you do?
Oh, well, sure. Well, so everybody, my name is Tony Wimperis. I'm a CPA. I'm a tax director at Reynolds and Rowella. We're a full service accounting firm based in Ridgefield, Connecticut. I've been doing this for 14 years now. I do a lot of high net worth individual taxes, business tax returns, and even some business valuation work. So Lisa, thank you for having me on.
No, thank you. All right, so let's talk about what an accountant's role is anyway. I mean, I always think accountant, tax time, that's it. But accountants know so much about our private lives because of all the money involved. So can you talk about like what an accountant really does?
Wow. So the accountant, is basically in my role. I'm doing a married couple's tax return, or anybody's tax return for that matter. Basically, somebody comes to us and says, my tax return is more complicated than I would like it to be, or you know what, I just don't have time to do it. I just don't have the patience for it. So they hire us. They provide us with all of their information needed to do it. We do the work, we sign off on it, as well as the taxpayer, and and we make sure that it gets filed before the major tax deadline. Usually every year it's April 15th, but if you file an extension, it could be October 15th. So that's really what we do. Typically, as far as information goes, we collect the person's W-2 if they're an employee. We collect all of their 1099s for their investment income, or perhaps they're self-employed, which you also get a 1099 for that too. We do their business return if one is needed, and we basically turn it around to them. Really, all they would need to do is just sign one e-file form that then allows us to then e-file the return on their behalf, from our office,
Yeah.
essentially.
One thing that kind of astonished me was when you say you collect the information. So the accountant that we had been using, I thought he was getting copies of all of the information. And one of the
Oh,
tendencies of people in our communities, what the issues that we deal with are people who are hiding information and hiding assets. And so I
oh,
remember seeing tax returns and then saying to the accountant, wait a second, because my divorce lawyer caught a bunch of discrepancies. And I said to the accountant, where is the supporting documentation to show that this is actually true? And the accountant said, well, your ex-husband didn't give it to me. And I said, but you signed off on this document. And he said, well, but if somebody tells us that the information is available, then that's all I can go. And I don't require actually seeing the documents, which I was really shocked.
oh, wow. Yeah, so that is a common thing. Accountants do that. Um, Technically, the accountant doesn't need to be engaged to dig into all the details like that. If all they're doing is preparing the tax return, a lot of times they can rely upon whatever information is provided to them. If something comes to their attention where it's like, oh, this definitely does not look right, then we have to flag it and say, hey, what's going on with this? What does this number mean? Like, why is this so low or so high compared to last year? As one example.
Yeah.
So
I
technically it
remember.
doesn't have
Oh,
to.
go ahead. Go ahead.
Yeah. Oh no, go ahead. Yeah.
Yeah, well, I remember my divorce lawyer because you know, obviously there's situations, as in most of our community, where one person deals with the money and the taxes and the other is kind of oblivious. And so I
Yeah.
was the oblivious one, and so I just signed things, and I didn't really pick through because I felt like I didn't have to because I loved and trusted my spouse at the time. And
Oh, sure.
so when my divorce lawyer really examined the tax returns during the divorce process, he found issues regarding expenses being inflated, or just things that, like, things with rental income that weren't necessarily true. And when I questioned the accountant, like, there was one thing with a significant amount of money that had been invested in something and then lost. And I remember asking the accountant about it, and he said, "Oh yeah, this $65,000 was from this one trade." And I was like, I didn't even know about that. And the accountant said, "Well, this has happened before." And in my head, I felt so betrayed because I felt like, why didn't the accountant tell me? But I guess that wasn't his role. So he
It
knew
really wasn't.
information, but it's not his role to get involved in a marriage. But it was hard. It was hard hearing that and feeling like he knew these intimate details that I would have thought, why didn't you say something? But I imagine confidentiality, right?
Yeah. Well, it's hard to tell what the accountant knows and well, for the accountant, what it's hard for the accountant to know what the spouses know about each
Mm,
other.
yeah, true.
Because it happens quite frequently where, both husband and the wife are on separate emails. Husband has the business, the wife has her own business. Usually one spouse sort of takes the lead with the
Hmm.
accountant and says, okay, here's our stuff. Um, but oh, maybe for these three things, oh, talk to my wife about that. That's her business. Or talk to my
Hmm.
husband. That's his thing. But usually though, if all the information comes through from one spouse, you have to think, okay, well, they probably know what it is. They probably know, both probably have access to the same information. But not always.
No, not the people listening here. No, like,
Oh
absolutely
yeah,
not.
no. Oh no.
Yeah.
No, and so I think as far as um, your own interests are concerned, if you have any doubt that perhaps your spouse is not reporting their share of income, um, you know, find out. If you have access to everything, be vigilant. Look at everything. Look at all the accounts that there are. Um, assuming nothing has started yet, like like say you're not quite in the divorce stage yet. I have to put a big disclaimer on a lot of things here. Talk to your attorney
Yes.
before you go too far with anything. I mean, I can definitely talk about situations and things you can do, but here but each situation is different. So definitely, I would say before you do anything, make sure that you talk to your attorneys. Um, but I think one thing that you could do is, yeah, make sure you're up on everything that your spouse has, as if you were in charge of it, and look through and honestly ask yourself, does this all make sense?
Hmm.
Uh, you know, it's easy to hide things if they really are horrible people and they are just evading taxes and they're doing money laundering or they're doing
That's
something
it.
way
Yeah.
out there. Then oh yeah, they're gonna you're probably not gonna know, But I mean, if everything's on the up and up, and I gotta say, for the divorces that I've seen, it's kind of amicable. They might not like each other, but at least they want to get the job done right, and
No,
they're
that's not this
agreeable. But
community. No.
okay, so with this case,
Never.
yeah. Okay, so that's very unfortunate. If you, as the viewer here, you found yourself in that situation, um, where you do have doubts, try to get up on top of everything that you can get your hands on, with your attorney's, blessing. You know, I say that because if you go in too far, you still don't know. and say, something does come back to bite you a few years later, like say the IRS decides to audit the tax return and they find that, wow, your spouse severely underreported his income by like hundreds of thousands of dollars, you know, um, by you having knowledge of him doing it, that disqualifies you from what's called innocent spouse relief, uh,
Hmm.
which is something that you definitely should look into. Um, you know, Definitely stuff can come out, I think, in the divorce proceedings too, how much they have and what they don't have, but it's not always with the tax return. So sometimes it's better not to know because then you can
Really?
get your hands rinsed clean after something goes wrong and it blows up. For example, like the innocent spouse relief is great when typically it covers people who filed their tax return with their spouse. They filed a joint tax return. Now, when you're married, there's two options. Maybe I should step back a minute. There's two options. One is the married filing joint status, and then one's married filing separate. And when you're married filing joint, all your income is combined. The wife's income, the husband's income, it's as if they're one. And they both sign their name to it. And both of them are jointly and severally liable for the tax. So if one spouse made all the money, but he has not paid, the others, and the IRS pursues him, can't get in touch with him, they will go after the other spouse, the wife, uh, expecting her to pay the full freight,
Mm.
which can, be really tough, especially when that wasn't even your income to begin with. If it was your income, well, okay, then you probably should settle up. But that's what happens to people. So, what you can do, so the other option is if you think that there's something that's not quite right and you can't trust your spouse anymore, uh, then you can do what's called married filing separate. Now, married filing separate status is basically each of you file your own. You're still married, but you file your own separate tax return, and you are only responsible for that income that you report, your wages, your investment income, whatever's in your name. Husband or wife, whoever it is, your spouse, they can file their tax return however they want. If they want to cheat, they want to totally underreport their income and you know invite an audit, then it's all on them. Um, which is probably a good thing to do. But if there's no ill intentions, there's no reason to believe that not all the incomes get reported. The joint return is good because um, it does save taxes
Hmm.
because basically it assumes that you're filing joint, so all the income that you have, it's combined, so the tax rates are also the tax brackets rather are double.
Hmm.
Uh,
Wow.
so like for what gets you to the 24% bracket as a single person, say like $100,000, whatever it is, it becomes 200,000 when you're married. So
Mm.
there's definitely advantages to doing married filing joint. It's highly encouraged. But however, the downside is if you do separate, you're probably paying more tax.
Hmm.
And both of you have to be on the same page about that.
That's
Uh,
not happening in this community. So,
okay.
yeah.
Well, then we go back to talk to your attorneys and come to an agreement about doing married separate returns.
Yeah.
Because, for example, if you're married filing separate, uh, if, in terms of taking deductions, you have to do the deductions the same way. So, for example, standard if one person takes the standard deduction, the other one has to also. And if one person itemizes their deductions, the other person has to itemize also. And how much real estate tax gets deducted between both of them, how much in state taxes, mortgage interest, charitable deductions. You give to a charity, you can usually deduct that. If you itemize that, that's all stuff that has to get decided. Who's claiming, and it's usually who paid it. But then, of course, if it's coming out of a joint bank account, You got to work that out first, you know.
Do the accountants work together for something like that, or is that you just each file
Um,
your own and then fight about it?
Typically, well, it can happen a couple different ways. One is that if, both spouses still trust the accountant they're working with, they just do, the accountant just handles each of their returns separately. He
Hmm.
talks to the wife and handles all the wife stuff. He handles the husband stuff. But he has to look. I mean, I've done it where I have to like look at both returns and make sure that we're not double counting anything. That, when I compare to their joint return the previous year, we are reporting everything. You know, um, so, that's one situation. Yeah, the other one is that, yeah, I mean, if there's another accountant out there and, husband decides that, the accountant is in the wife's corner and he wants to go off on his own, find another person, yeah, they could absolutely work together.
Hmm.
The accountants need to be aware of it. And it might make sense for them to have a quick call. Hey, just want to make sure um, we're reporting things correctly, nothing's getting doubled up, we're not missing something. I've also seen it well, this is more like after the divorce is final, and we're filing now two single returns, under single status.
Hmm.
Um, Usually the divorce decree spells out who gets to take in that final year, who gets to deduct the mortgage interest,
Hmm.
and I've seen things. I thought one agreement I saw a couple years ago was like 5/6 of the mortgage interest goes to husband because he was making 5/6 of the income that year,
Hmm.
something like that. So there's a lot of that.
Yep. What's the difference between an accountant like you versus a forensic accountant? Because a lot of times a forensic
Oh,
accountant gets involved in cases like ours.
okay. Yeah, so forensic accounting is a bit different. It's not really for tax reporting. They're there to get to the bottom of wrongdoing. When
Mm.
there's suspected wrongdoing, they typically work lead with the attorneys. And but I think anybody, just on the outside can, if they have access to the information. I think there is sort of a legal process, though.
Hmm.
I'm not too familiar with it. It's not
Yeah, so
it's
you
not
don't
really
do
my
anything
area.
like that. It's not like you have a
No.
forensic accountant hat that you could put on.
Oh yeah, no, I found it fascinating though. When I was in college, I thought about it because I've heard of people dressing up as janitors in these large companies. Um, if they suspect that the bookkeeper is stealing money, you can pose as a janitor after work, and when they're not in the room, you take files. It kind of
Wow,
sounded like
that's
a,
exciting.
yeah. I mean, which is pretty cool, but it takes a certain personality for that.
Yeah,
I love sitting in my office doing my tax returns, you know,
yeah, you don't,
keeping
I mean,
money.
I don't know you well, but that you don't strike me as that type of person.
No, I knew a couple people who did that, and they were this one fellow I knew in particular. He strongly considered a career in law enforcement
Mm.
at one time in his life, but no, he became an accountant. But then he realized, oh, I could become a forensic accountant.
Uh-huh.
So he studied for his certification for his CFE, and he went for it, which was pretty cool.
Yeah, that's really neat.
So yeah, but forensic accounting, that's when there's suspected wrongdoing. Like there is
Mhm.
somebody who's stealing money. Um, they're saying one thing, they're reporting one thing, but there's something very different going on.
That is our world because we only deal
Okay.
with high conflict cases. So
Oh yeah.
most of our clients have forensic accountants involved or certified fraud examiners.
Wow, that's good. Yeah,
Yeah.
yeah, certified fraud exam. Yeah, that's what my friend Mike went for. It's the CFE,
Yeah.
and
That's like another level.
it's a whole nother level of detail and things to look for. And I've heard it's actually very tedious work, because every little transaction can matter.
Hmm.
And you're actually looking at very large data sets to see trends. Um, like if there's one thing he did mention at one point was that you know, if there's a policy within and this applies more for like a company, but I suppose it could apply to the um, if it's like one of the if it's the spouse's business, and somebody's taking money, it sometimes it works out where, like, if you look at the number of checks written,
Mm-hmm.
if it requires, okay, so here's a great example. So say there's both spouses have access to a bank account. Um, any the company policy, and they're both owners. If the company policy is that both need to sign approval for checks written over $5,000,
Mm-hmm.
if you so happen to find a whole bunch of checks in your data set that are like 4,000 in the 4,000 range, they're trying to take as much as they can without requiring the wife to also sign off on it.
Oh, wow.
That's the sort
Interesting.
of thing they do. They look for stuff like that because, obviously if there's a fraudster, they're going to try to take as much as they can, but
Always.
without being caught,
Under the radar.
So there's, yeah, under the radar, literally, but it's funny, human behavior is very predictable, and there are certain trends that you can spot, but it's detailed because, every transaction can matter.
Mm-hmm.
Uh, you wouldn't think that, something really small with, $20 here or there would, but sometimes it can,
Yeah.
depending
Yeah.
on what they're
Well,
trying to do.
it adds up.
It does add up. Oh yeah.
Yeah. What are some misconceptions or mistakes that you see people make during the divorce process with accounting, with their money, or, expectations over how it's going to be?
I think it's just they don't let the accountants know early enough,
What does
honestly.
that mean? Like early enough? Like what should they be telling the accountants, and how soon? You mean that they're even going to
Oh, so
separate, or?
it should happen. I mean, depending on what the proceedings are. I mean, I think as soon as they filed for divorce and the proceedings begin, that's probably the time that we should know about it.
Hmm.
Because first of all, we should, especially if it's a high conflict thing, like a lot of viewers are, we need to make sure that we're not also CCing the spouse on things.
Oh, that's a great point.
We unknowingly, because we build great relationships with clients over time, and most people, 90% of the people we talk to, they're looking for our advice. We're on a first name basis. We're obviously, client confidentiality is a really big deal.
Hmm.
But we don't necessarily know, you know okay, oh wow, husband's getting kicked out of his house. He is a toxic person. He's
Hmm.
going after the wife, and here we are sending an email, oh hey, to the wife, and CCing him, oh yeah, we heard about this capital gain you had. You made a
Yeah,
lot of money this past year. You exercised your stock options.
that
Uh,
is such an important
you know,
point. So,
tell your accountants as soon as possible, so then we can start doing, putting the right process in place.
mhm,
Um, we can also do tax planning. Tax planning is a real big deal when you get divorced, because suddenly you're going to end up with assets that perhaps you didn't have before. Um, when property is split, just so everybody knows, when it gets split, and say you end up with a portion of your husband's belongings, or your wife's belongings, uh, that is not taxable when you receive those assets, like an investment account, or maybe a portion of his pension, or something like that. Under Section 1041, that's just excluded from your income. However, if those assets, like an investment account, generates income, uh, well, you're going to have to report that going forward.
mm,
So what can happen is, we don't necessarily know, or uh, or we don't, or maybe we know, but we just don't know what the income's going to be. Okay, then you're a single person now. You go to file your tax return, and wow, you're going to owe a lot of tax all of a
mhm,
sudden. And best thing you can do is tell your accountant, work with your accountant before the end of the year, uh, before he even starts the tax return, and say, hey, listen, this is what my investment account has this year. What am I going to owe? And he can figure that out for you. So then when you do get to April 15th, it's not, oh my gosh, I owe 20 grand. Why? You know?
yeah, Yeah.
That's a common thing.
Are there
Also, yeah.
mistakes? Oh, go ahead.
Oh no, go ahead.
I was going to say, what about, so most of our people also have children, and there's all kinds of
Oh,
issues with knowing what to do properly with kids during divorce and taxes.
oh gosh, yep. Probably the most common mistake I see with that is that both spouses try to claim their child as a dependent.
Mm-hmm.
And you know, if and this usually if we end up having both spouses stay on as clients, this doesn't happen because then we can check back and forth and say, oh, okay, this kid's on this return, therefore the other person can't claim the kid.
Mm-hmm.
But if, one spouse goes to another accounting firm and people lie, oh, I'm claiming him this year. I'm
Mm-hmm.
claiming little Johnny this year. And the wife says to us, oh, we're claiming little Johnny. I mean, we won't know. We will know, however, when, uh, well, either us or the other accounting firm will know when we try to e-file the tax return.
Mm-hmm.
Because what
What
happens
happened?
is when you e-file the return, um, if the social security number of either the taxpayer or a dependent or anything was used on another tax return, it gets bounced back saying you can't e-file it this way.
So the whole return can't be filed?
Yeah, it can't be e-filed. You can still run it to the post office.
Well, I
Uh,
imagine e-filing, a lot of times, I know with our time, we wait till the last second, it's like, oh, we're going to get it in right before the deadline.
oh yeah, yeah. No, e-filing is so much better for
Hmm.
a lot of reasons. You don't have to carry this big thing down to the post office and make sure it gets mailed, and make sure you do certified mail. Otherwise, if it gets lost, the IRS can't come back and say that you didn't do it.
Mm,
You filed late. Uh, you know, but let's say one tax return goes in with a dependent on it. Husband gets his in and all that, and then okay, we're working on the ex-wife's return. Yeah, it's going to get bounced back. And then there comes a question of, okay, well, who had the right to claim them as a dependent?
hmm
And typically, and there's a whole set of rules for that, and it depends on the situation. But um, there's typically custodial parents and non-custodial parents. The custodial parent is, the who is the parent who has custody. Maybe they both have custody.
hmm
Custodial parent is the one the child spends the most time with,
hmm
or the child lives the most with during the year.
Yeah, we call it
Measured.
like the primary residential parent sometimes.
Yeah. Okay. Yeah, that's another good name for it. Yeah. You know, that's the person who should be claiming the dependent. However, there are cases where, say, dad was wealthy, um, child lives with mom, uh, but dad was wealthy. He provided most of the support for the child. There's a couple of other criteria, but essentially, in that situation, he could then argue, well, gosh, I'm really paying for their living expenses. I should be claiming them as a dependent. And I
Hmm.
think that might be where some of the conflict comes from.
Oh,
uh,
definitely.
but what can happen is if it doesn't really affect the wife's return, there's actually a written statement that can be filed that says, you know what, I have the right to claim this child as a dependent, but I'm actually waiving my dependency exemption. Uh, or credit Dad, you can take them. You know,
Hmm.
so there is that. But then, of course, the father claiming the son on his tax return has to include that statement as an attachment to the tax return, just saying, "Hey, the custodial parent waived the dependency on this kid. I'm claiming him."
Hmm. hmm Are there, I would imagine there's significant tax benefits to claiming dependents.
Oh, there is, yeah. Oh, yeah. Depending on how old the kid is, usually it's like I think over 17 is 500,
Hmm.
and then if they're under that, you get the child credit. It's like 2,000. Um, so they replaced the old time dependency exemptions a few years ago, um, before 2018 with the Trump tax plan. But now it's, instead of getting a deduction of a larger amount, like $4,000 or $5,000 a kid, now it goes to a credit,
Mm.
um, which ends up actually, in some ways, for some people, it ends up working out better.
Hmm.
Um,
Okay.
so
All right. So
anyway,
speaking of better, so instead of mistakes, now let's go to some tips that people should know to protect what's theirs. Like, what should people be doing? We talked a little bit about, telling your accountant sooner rather than later. What are some other things that people can do to hopefully save aggravation?
oh, one thing is, when you get divorced, you are going to be uh, single again. You are under the single status. Um, and when that happens, basically the tax brackets get cut in half, which means that if you were earning a significant amount of income before, you're generally, and you're keeping deductions and stuff, generally you're going to end up paying more tax on that. So make sure that as soon as it goes through, you update your withholding form with your employer, and that's a W-4.
Mhm.
Uh, and if you just talk to your HR person at work, they can help you with that. And that way, because what happens is, when you're marriage filing joint, you know, the rate brackets are double, and um, there's less money taken out of each paycheck. So it works. So okay, you get a paycheck every couple weeks. Well, guess what? You're not getting the full. I'm making up numbers. $2,000. They're going to pull out a certain percentage for federal taxes. They're going to take out state taxes, and they're also going to take out payroll taxes. And that's in addition to maybe a 401k contribution you make, whatever else that you have. So, and okay, so ratably, the government's getting the money all the way through the year, really, with each paycheck you're getting. That money's getting set aside to pay for your taxes. So guess what? If you end up with the same tax, okay, but now the rate brackets are double.
Mm.
You're going to owe a
Yeah.
lot more tax, and your withholding is still down here.
Mhm.
So by bumping up your withholding, and you should probably do it as soon as uh, have confirmation that the divorce will be final within the current calendar year, update it to single status, so then you start getting a much better, more appropriate withholding taken out of each paycheck.
You just made me think of something. So you said if you know that the divorce will be final. In our community, a lot of these divorces go on for years. It'll take 3
Oh,
years
wow.
or
Okay.
more. So if you don't know that it's going to be final, if you're just negotiating and trying
Oh,
and you're
yeah.
still together plowing through this, I mean, you can tell your accountant and the accountant will know what to do, right?
Yeah. Oh, yeah. You could say, hey, I'm expecting this type of income. This is what our filing status is going to be. We have agreed through our attorneys, we're going to do marriage filing separate. Uh, Definitely, make sure that he's on board, because, talk about protecting what's yours. If you end up underpaying your tax through the year, they're going to assess interest and penalties on it.
Mm.
If you don't pay in through the year, what, at least 100% of what you owed last year, you could end up in a spot where, and this happens so often, people just, they don't want to pay, so
Mm.
they procrastinate in making their payments, and we're always after them to make sure you make your third quarter payment, fourth quarter payment. That's more for the business owners, because they don't have withholding. You just
Mhm.
have to literally write a check to the government, to the IRS and the state. Um, but if you don't pay in enough, what they'll do is they'll actually assess interest on the portion that you end up short, and it's, the interest rate is 6, 7, 8%. Um, and it can add up quick.
I know. We have clients with stories like that.
Wow. Yeah, I can imagine. You know, um, Protecting what's yours also. Say you did a joint filing, and then you know, uh, come to find out the IRS is auditing the tax return. or you get a notice in the mail saying, hey, uh, guess what? We're assessing a lot more tax, um, and we're penalizing you because you didn't pay it in when you were supposed to pay it in. Oh, but it belongs to your husband's income, not mine.
Mm-hmm.
Then that's when you can file the innocent spouse relief. Now, the innocent spouse relief has to be done within 2 years of them assessing the tax or attempting to collect it. Um, and then what ends up, the only thing though you have to be careful of, I mean, absolutely do it. Because look, if you shouldn't be on the hook for that money, then absolutely you shouldn't have to pay it. If that's them dropping the ball or trying to hide and cheat, like it shouldn't be on you. Get an attorney involved, because what it involves is you can file a form. It's a form 8857 to get the innocent spouse relief. But by filing that form, they end up contacting your ex-spouse to
Mm-hmm.
say, hey, your wife isn't paying. She's trying to claim innocent spouse relief. You might be on the hook for everything. And they generally don't like to hear that.
Mm-hmm.
The IRS does their best to protect your information, like they don't give out your address. They only give out your name. Um, but on the other hand, if husband knows where you are, then that could be detrimental. So you do want to give it some thought before doing it.
Yeah, that's a
Um,
really good point because safety is a huge issue also.
Safety's oh yeah, if that person's crazy, then really you got to protect yourself,
Mm-hmm. Yeah.
Um, this also can happen. It's also good to do innocent spouse relief where, say you're single, maybe you got through the divorce, you're rebuilding your life, you're starting to feel good about things, you're away from that toxic personality that weighed you down for so many years, and you're coming into your own again. Oh, but then you get a letter, you file your tax return, okay, and you're expecting a refund. Oh, maybe you're getting back a few $1,000s.
Mm-hmm.
But then you get a letter in the mail saying, hey, um, we found that your joint tax return when you were still married a few years ago uh, wasn't totally paid. And we're actually applying your refund back to cover that.
Yeah,
That's another reason to do innocent spouse relief.
that's a really good point.
Make sure, and you got to do it within 2 years of them um, contacting you about it. And some IRS letters are actually helpful. They actually mention the Form 8857. Here's what you can do. Here's some resources online. Look at our publications, etc. And definitely, I think when that happens, yeah, contact your attorney and see what you can do about that, because that shouldn't happen.
Yeah, yeah. Wow, super helpful. All right, Tony, I don't know if there's any other tips, but this is like
Oh,
really great information.
oh yeah, no problem. Oh, I'm happy to help.
Yeah.
Um, I'm just looking through my notes. I took a few notes for today just to see if there was anything else to bring up.
Yeah, but
I
that's
think that's
really,
it.
really helpful.
Yeah, no
So
problem.
before we sign off, can you tell people how to find you, or are you geographically limited at this point?
I am not. So you can contact me. So I'm I introduced in my introduction, I work for Reynolds and Rowella. I've actually just accepted a position as tax partner at Adelson and Company up in Pittsfield, Massachusetts. And you can definitely contact me there. I have to get the web address. Oh, let's see, I start there next month.
That's okay. You just let us know and we can put it in.
Oh, okay. Yeah, maybe that's
Yeah.
the way to do it. But
Yeah.
anyways, yeah, that's how you can find me if you have questions. And I should just end it with every situation is different. Every situation has its own challenges. Um, again, a lot of the situations I described may or may not totally fit your situation. So, if you have questions or if you really need help, please contact me, and we can help, work through things for you. And definitely talk to your attorneys, before diving into your spouse's records or anything like that, just to make
Yeah.
sure that that everything's done on the up and up.
Great. All right. Well, thank you so much, Tony, and thanks for all that helpful information.
Well, thank you, Lisa, for having me. This was great. Happy to help.
Thank you.